It's turnover time. That's our topic for today's Backstage Pass. Well, hey there everyone. It is turnover day. Today is the first business day of a new month. Welcome to October. It's the first business day of a new quarter. Quarter 4 2022 is here. And where is the time gone this year? It seems like it's flying. And just a few days ago, it was the first day of fall, and it's really starting to feel like fall outside, that's for sure. It's turnover time, and even stocks and bonds, they're kind of feeling the turnover love. Stocks are up sharply after being down sharply all week last week. Stocks are making a move up. Mortgage bonds, same thing. They were down sharply last week. Mortgage bonds are making a move up. As a matter of fact, mortgage bonds are up 113 basis points on the day today. The 10-year yield is down about 22 basis points and trading at 3.56%. So some pretty major moves in the bond market, and it seems like it's a little bit of a turnaround from where we were heading. Still wondering if this is a permanent shift or just a trend. Where are we at? We'll talk more about that in just a second. But on Friday, the 30-year fixed, the national average for a 30-year fixed mortgage, well, that closed at about 6.79%. That's where that was on Friday. Today, it's opening up about the same, but we could see some repricing for the better if the gains in the mortgage bonds, well, if those hold, we could see mortgage rates start to dip a little bit more again today. And while the new quarter and the new month and the picturesque weather outside, while that seems like a good reason for bonds to turn over, well, that's just not the case. As a matter of fact, news out of the UK, some financial news out of the UK, that was part of what was driving the bond market the past couple of weeks. And there's been a little bit of I guess you could say, a turnaround or a turnover over there in the UK as well. And while that's spilling over into the United States, that's part of what has caused a turnaround in the bond market. But bonds also got a shot in the arm from the ISM data. This is manufacturing data for the United States, and it shows that U.S. manufacturing stumbled in September, and it's down to a 2-year low, about the same as where it was pre-pandemic. It's back down to that level, and look, it's the third contraction in the past 4 months for this U.S. manufacturing index. It's the ISM PMI index, and this could be a leading indicator about inflation. It basically is showing that, hey, the market, the U.S. economy is starting to slow down, and that could be, this ISM data could be the leading indicator that, hey, market's slowing down, economy's slowing down, and inflation could be coming down as well. Kind of those effects that the Fed has been looking for as it's raised the Fed fund rate to try to slow the economy down. Now, again, whether or not this is a permanent shift in the trend for mortgage bonds and rates, for rates too, we don't know yet for sure. We're looking for confirmation, and that confirmation could come this week. This week is jobs week, and on Wednesday and Friday we've got ADP jobs and BLS jobs. The ADP report is expected to have 200,000 job creations. The BLS report is expected to show 250,000 job creations, and the unemployment rate is expected to stay at 3.7%. It's expected to stay flat. The data that comes out in jobs this week could be the thing that kind of locks in mortgage bonds and kind of changes that trend line that we saw from August all the way through September, that downward trend line. We could see that to start going up on mortgage bonds, which means that mortgage rates could start coming back down off that 7% basically high that we saw in the past couple of weeks. Now, that's all the news that we have for today. We are looking forward to those reports this week, and we will bring them to you as they come. But that's all that we have for today. Remember to like, comment, and subscribe. If you have any questions, please leave them in a comment. Don't forget to like and subscribe. Remember to stay positive. Have a great day. We'll see you tomorrow.